Hello everybody, this is Artie again from Bearable Traders with another episode of Weekly Options. So, Bearable Traders, we just got into option trading and these videos have been really popular. So we're going to talk about market and macros overall, what's going on in the market, what are some of the signs that we're seeing. Then we'll work our way down to trade ideas, a very jam-packed session today. I have a really good trade idea that could work really well for next week. And then we're going to look at my trade log, the trades that I set up last few weeks, how did they do, and what open positions I have as of the time of recording this video. We're recording this video on Friday at 2 o'clock Western time, so it's like 5 o'clock Eastern. Market is already closed on April 8th, so pretty dark in the office. Most of our traders have gone home, but here we are making a video for you guys. Overall, in terms of the market and what's going on, energy continues its strength. It had a little bit of a pushback, but still a very strong sector. We've talked about this with our traders specifically. And I know some traders shorted energy, but shorted energy in this pullback, but energy is going to continue to be strong. There's so many supply constraints in the energy market with the war, unfortunately, that I think oil prices are going to continue to be strong. So relatively, when you look at XLE versus a SPY, you're seeing this strength. I think this strength is going to continue. Same story we're seeing in utility. So utility has been really strong. They're continuing their outperformance. So when you compare XLU, which is the utility sector, with a SPY, you're seeing the same story. Same story again in the healthcare. So healthcare has been very strong in the last few weeks, and it's moving higher even more. So the story and the theme is continuing. That brings me to one of the points that I've been kind of talking about for the past 4 or 5 weeks is the business cycles, right? We've talked about businesses like anything else in life goes through cycle of a recessionary bust, inflations. So last year when market was doing really well, usually real estate is the sector that does better than every other sectors in the peak of the business cycles. And I've tried to build a case that hey, we're entering here at the bottom of business cycle. So this is when you'll see XLV, which is the healthcare, XLU, which is utility. These guys are going to outperform. And boy, have I not been right. So we've seen that in terms of sector to sector on a day-to-day basis. And this is something that I've been talking about for the past 4 or 5 weeks in our videos. Definitely pay really close attention to business cycle and see what's going on in the market. Same story with the financials. So, we talked about financials being the weaker sector. The reason being, a lot of people were asking in the comment section, hey, the rates are going up. How come financials are lagging? The reason is not the yields, but the reason is actually the yield curve. So yes, short-term rates are going up, but yield is getting flat and inverted. So that's the margin for financial companies and financials as a sector. The sector has completely lagged when you compare it with a SPY, but I think we're going to find some kind of a support here. Next week is going to be financials earnings. So Goldman, Morgan Stanley, all these banks are going to report. So definitely pay really close attention to next week and their earning results. And of course, the small caps. It's been brutal for them. The trend is very clear here when you compare it with large cap and S&P 500. It's downward, so tough times for small caps, definitely. Let's review the market. So let's go to our stock trading simulator. Scenario in SPY, this was the Fed's minute. Fed's minute came out, market kind of gapped down. Now we're consolidating. We're gonna decide if we want to move higher or lower. I don't see a lot of reason why we want to move higher in this scenario, but for now, these moving averages are acting as a support. So SPY is holding a little bit, and volatility is on its way down. You can just look at the wicks, and you can see wicks has come down tremendously in the past few days. Qs are seeing the same story again. So, this was the kind of the Fed's minute, a couple of gap down days. Same story again. These moving averages are acting as a support. We're probably going to consolidate for a few days until we decide if we want to go up higher or go down lower. In this environment, if I had to bet, I would bet lower, right? So we know it's a tougher time. IWM, small cap, again, same story. As you can see, these charts look very similar. So weakness, some kind of a support, but still no decisiveness. And if we go to our trading terminal and look at the sectors, all the sectors closed red today except for Dow. So small caps down almost 1%, S&P 500 about 25 basis point. And in terms of week, majority of sectors closed red except for your defensive names. So healthcare, energy, consumer staples, utilities. So pay really attention to this, as well as real estate. This is interesting as well. It seems like investors are going back to value names and high dividend names, and they don't want to take a lot of risk. Consumer discretionary, technology, industrial, and communication services were some of the weakest sectors this week. Trade ideas. We've seen early signs of recession in Europe. So here's a really good trade ideas if you want to play the Europe recession idea. My thinking is finding high PE, high valuation growth stocks in Europe, finding low cash cushion European companies and short them. Because if it is true what the bond market is telling us and Europe is already going into recession, there's already a recessionary sign, these companies are going to get crushed. And as a hedge, you could go long European utility names or conglomerate names. So that could work out as kind of a relative trade, short and long. I haven't done the research on these, on what companies could be a great target. I'm going to do that over the weekend. And probably post it in my newsletter. If you haven't subscribed to my newsletter, I'm going to put a link in the description here. So make sure to sign up so you can get the real-time trade idea and what comes out of this trade. But if Europe goes to recession, which the bond market is telling us it's definitely happening, this is going to be a very profitable trade. This is something you want to be doing. And then here's my trade log. So, you know, I'm having a little bit of a tough time on my Tesla and mRNA strangles. These two are currently losing money. I was expecting for volatility to expand. It didn't this week. Maybe it will next week. We don't know. One thing we know is these names are really volatile. I was up at some point on this, but I got greedy. So that's one of the scenarios. I closed my bear put spread on junk bond yields. When the Fed's minute came out, this trade went in the money and I took the profit and came out of this trade. I'm still in my relative trade of long utility, staple, and healthcare and short discretionary. This trade is just starting to make me money, but I'm really patient with this. I'm going to keep it all the way till end of Q2. So this is something that I'm going to play around. And then lastly, the last open trade that I have as of now, as of today, April 8th, is a bearish credit call spread on Lulu. Lululemon just had their earnings, and the chart, the technical setup is really good. So on a fundamental level, we know consumer discretionary is going to be weaker, so that makes sense to play a bearish play. But on a technical, the same story goes as well. So let's take a look at the chart on Lululemon, and again, this chart is by our stock trading simulator. So, but look at the doji here. It seems like this area is a area of resistance. This was after earning, first day after earning, stock gapped up, went up, sold off. Same story, tried to go back again, couldn't, sold off. And then today it also sold off. So I think this area is going to be protected. There's so many headwinds for consumer discretionary and Lulu in general that I think over the next week a stock is either going to consolidate or move lower. And this credit spread is going to work out real nice. So that's my bet on Lulu. Overall, a packed week, lots of events happening. Like always in the market, there's always something going on. And my job here is to work with you guys, find great trading opportunities, and share it together. Feel free to email me at rd@bearabletraders.com. Follow me and our other moderators on Twitter. My Twitter handle is right here, rd _ my last name. And lastly, definitely feel free to check out our publication. Andrew, myself, a little bit of a shameless plug at the end of this video. Thanks, and we'll see you next week.